Hello, everybody. Welcome back. This is episode 3 of Positions and Perspective. Today, we're going to be talking about the 3 trades that I took last week. This week, no trades. We'll talk about all that. Okay, so as you see here, currently at a balance of 49,614. So very similar to what we talked about last week. We took a break-even win around $1.69. So this is Thursday was my trading day. I took 3 trades. I was busy at the beginning of the week. I went hiking.
Oh yeah.
Super great time. I loved it. But trying to get back in the swing of things. Took a couple trades, bit forced, but they weren't terrible trades. It's just the market conditions. But we'll go into all of that. But we're going to talk about what's going on here. Okay, so the day that I traded was actually Friday, 25th. We go over my daily analysis here. Scroll down. I'm looking at a couple different things here. Mostly just these highs and lows here. We're drawing towards that negative 0.27 extension that was set on the monthly. And in my expectations here, my plan is I'm going to scout some shorts if displacement away from premium is seen off of an impulse inducement of longs. Okay, so basically I'm looking for this first, this moving higher before we move lower. So when I go into my VOD here, we're going to see that price reaches that level here and is back into this 5-minute busy here. I took a little forecast here. I just want to kind of get a feel for the marketplace. I'll do this. I'll place like little positions, but like not actual trades, and kind of see how price reacts as we're trading there. So right now I'm kind of looking forward to continue drawing towards that dead zone high. You can see that little eyeball there. We end up drawing below this low here, and I'm looking for a continuation below this low to kind of sweep these relative lows that are created. We get that inducement of longs here, sweeping above these relative highs right after that 9 o'clock macro. And I'm, still looking for that continuation higher or lower, kind of fading this completely. And so I'm looking at this gap. We explode aggressively through it. So look at the inversion of that gap because we displaced through it. Aiming for those dead zone highs. So still waiting for that before I expect that bearish protraction lower. That ends up sweeping that low also. These relative lows here. I don't discount this as necessary as going lower. We kind of just wick below it and they pop right back up. Just being patient, just waiting. Let's keep scrolling. We displace higher. I place a limit. We broke above this high here. And again, that's the same sort of entry towards this gap. We form another busy here. It's kind of what I'm targeting. You see a volume imbalance here. This order block that forms at that new day opening gap close. Okay. Price taps that entry. I'm looking for it to wick through it so that we can return back to this volume imbalance. And so breaking higher and not actually retesting this volume imbalance. So we only got 4 out of the 5 contracts entered. Price moving higher, meandering, consolidating inside of that gap instead of expanding. Move aggressively higher here. But still not wanting to displace and continue higher. So even though, it's moving higher, it's not showing that sponsorship. So at this point, I'm nervous that price is going to try to attack these lows again. See this mean threshold of this 5-minute bullish order block here. That's what price is rejecting off of. Again, overall, at this point, I'm still bearish. I'm still weighing the possibility that we're only sweeping this dead zone high here and we're not actually going to sweep that overnight session high and then move lower. We'll get into why I switched that up, but for now, this is where the draw is. We move lower, back below these lows. As expected, we started drawing lower. 930 hits. We kind of retest this gap here. Now I'm looking for price to reject off of this gap and continue moving lower towards that low. Price sweeps this one. Reject off that new day opening gap. Okay, so now if I was in a short position, I would want price to reject off this new day opening gap and show that sponsorship again and move lower aggressively. We're still in this contraction, so I want to see price break out of that contraction. Because we do not reject here, and we displace higher, I negate the trade and I look for a long. That's telling me that it's just moving this low. It's going to keep this low here. So we're just displacing aggressively higher, negating the short. I'm watching how price rejects it. It could be rejecting off this rejection block, but at this point, it's holding that. It's closing in a really deep premium. It wouldn't make any sense for sponsorship to be seen now. Okay, so just looking for price to continue to come back into this gap here, redeliver back into it. And again, I'm just going to look for the draw above that overnight session high up here, negating the expectation that price is going to drop below these relative equal lows. The mistake is coming. Start drawing my entry a little bit higher, chasing price because I think it's going to start showing that sponsorship. You see price break above the highs here and form like a bullish order block inside of that gap, rejecting off of this order block here. So that's a repulsion block. So retail wants to go long here. Stop loss placed here. See, I see that, right? I'm noting that. I'm noting that price is forming those sell stops here. Now, watch. Price continues higher, back into that mean threshold. See if we get a rejection again. And I want to see that retracement off that mean threshold to lead into this entry right now. If we continue higher, I'll negate this accumulation one entry. Basically, if I see some sponsorship above these relative highs, I'll be like, okay, we're not going to get that deep retracement back into a discount. We're going to look for this repulsion block. If then. It's a constant if then. We're starting to see a little bit of accumulation at that mean threshold here. If we return back into this order block. And I mentioned I wanted to see that displacement. We didn't get it, but I felt that I was going to miss the move if I didn't enter at the propulsion block. So I raised my entry to that propulsion block, allow for an IOFED here, placing my stop loss here. So prematurely expecting that expansion model entry before getting that confirmation here. We're not seeing that displacement through the mean threshold. If we did get it, then this would be fine. But since we didn't get it, we just got the sweep, you have to still expect this gap to be redelivered into. Now look how quickly price seeks the liquidity at this bullish repulsion block. This is already a telltale sign that it's going to probably go back to this gap. If it slowly kind of meandered lower and then wicked into it and then moved higher, that would be fine. But since price is already here, this is not a good entry. And I know that. And that's why I mentioned that I'm putting my stop loss here. Because now in the back, in the back of my mind, I don't want to accept it, but I know that this gap is probably going to be redelivered into. Notice how price uses it short term to reject here. Comes back into this gap here. The IOFED, it's not going to be an IOFED, occurs, and price is going to aggressively move lower and redeliver into this gap. At this point, I'm more hoping that it does an IOFED rather than having strong confidence that it's going to. I mentioned that because I know it's going to. It's funny. These reviews are very, very helpful for me. I hope they're helpful for you. I know I haven't been extremely consistent with these, but I want to do them weekly. Leave me a like, hold me accountable, because I do enjoy, making this content for you guys. Price seeks that gap from that initial entry. I'm looking to close it because now I know it's probably going to wick through into this volume balance. I hesitate. It does that. Rejecting right off this rejection block. Now, here, I'm like, okay, this doesn't mean that we're going to sweep these lows. If this was an expansion model entry, that was a high probability, and we did see that displacement here instead of just wicking and accumulating before moving lower, then this would negate this entry. We would look for an inversion of this IOFED to sweep these lows. However, since we did not displace through this mean threshold, we just accumulated here, sweeping this buy side here, we're turning into this bullish propulsion block just for reaccumulation to reach into that retracement. I know that this trade was too early, and that is why I'm not looking for this low. I don't want to admit that I was wrong. See how price rejects at that rejection block here? Displaces right through above the IFA, closing above it. Not too sure. I don't really think it's going to break these lows. I just think I'm just getting wicked out and played around with, I guess. IFA turned into a complete redelivery. Back into that new day opening gap close. I think my stop was too tight. Yeah, it was. My next sort two, buddy. I would have kept this entry here. That would have been sufficient. I think I just raced it too early. You did. Notice I'm not placing it this low here, but I'm placing it here. All right, so we're going to scroll forward a little bit. I placed that limit order at this gap here. Also, if you guys want me to post the entire VOD, I can do that also. But I like doing it like this more, kind of talking about what I'm doing. I think the entire VOD might be too boring. Notice the difference between this entry and this one. How we broke aggressively into it and then we continued through it. While here, we moved lower, consolidated a little bit, went back into this gap, did form the IFED, now consolidating here, not spending too much time below this range, and then moving higher. All right, so quickly gonna pause this here. We see this divergence here form short term during the dead zones with a lower high in YM. We sweep above it here, but form that divergence here. NQ is moving lower, YM is contracting, ES is contracting here. So at this point, we're seeing a lot of asymmetry. I'm like, okay, we're stuck in that contractionary environment. Now, the probability that this is going to pan out and lead to that expansion is lower just due to the asymmetry. If we continue to see asymmetry in NQ moving lower, that's going to put pressure onto ES also to move lower. So I am very cautious with this long entry. Away from this IOFED, then I'm going to negate this entry. I give it like 2 minutes. I want to see it start expanding. 2 minutes is kind of a lot. Again, this does contract much longer before it does eventually go higher, which we'll talk about. But I like that I'm just setting a rule, I'm sticking to it. I want to start seeing that return to symmetry. With YM, or excuse me, NQ trying to break higher through that 830 open. Now this 45 is a fairly arbitrary number. There's no, I mean, there might be, but I'm setting that as my risk tolerance, basically. ICT doesn't talk about pricing to expand before the 945, time or whatever. This is just in this market profile. I want to see price show that sponsorship by 45. Otherwise, more contraction can occur. It can move lower. At that point, I've already been in front of the charts for an hour 15. I'm approaching that time where I might start making mistakes, as I mentioned in my previous episode. So that's where my risk tolerance is. So now this isn't hesitation. This is me setting the rule and then having that close position up. Entertain me. Last chance. And then just close it. So, all right. That's it. We could just break above this high. I don't really care what else happens. We're just getting a lot of asymmetry, and I'm not a huge fan of it. NQ is starting to try to break higher now towards that 830 high. We'll sit here and watch for a little bit, but no more trades. We just wicked a little bit above this high. Now we're reaching for these lows again. We're just gonna get rid of this and clear up the charts. Because we didn't get that sponsorship here, we wicked above this high, and now I'm looking for these lows. And this, because I have no need to prove that I'm right. I mentioned this the other day. I used to leave maybe I did mention this last episode. I used to leave the projections on the chart because I wanted to see if I was right, even though I had no confidence if it was going to work out or not. I just wanted to see the candles not hit the stop loss. So, that's a rule that I have. I won't leave projections on if I have no interest in being in the marketplace. I love the rule following that I'm doing. I'm very, very happy with how I'm interacting with this price action, because this price action is, see, like, look at this, is just garbage. Like, this is terrible, terrible price action to be trying to trade in. So I'm handling this perfectly. Love it, love it, love it, love it. Pricing the volume bounce to that first entry, contracted between these order blocks here, expanded higher, broke above these highs first, then moved lower to move higher. Same thing here, higher to move lower to finally move higher. Sweeping those dead zone highs as expected. We didn't move lower, which was negated, as I was mentioning. Again, it was 50-50 once we actually started seeing NQ push higher. If we bring up NQ here, let me do it this way actually. We see NQ moving higher here while YM moves lower. That's at 46 level, so we start to move higher here, contract, and then YM starts to move higher. As ES is moving higher, we kind of still get that contraction IQ. But regardless, we do end up moving higher. That asymmetry really led to low probability conditions on top of the contraction. So I'm very, very happy with how I executed this daily range. So didn't do any trades last week because we are forming a top, possibly. I just didn't really have any interest in trading this week. If you go to my monthly analysis here, this is the template I use for monthly, weekly, daily chart settings. Okay, so we did see a gap lower here. I'll utilize that as I do my as I revise my weekly review with this new week opening gap and my daily review for trading tomorrow. But overall, price did break higher here on Monday, reaching that -27 level back into the old high, just to sweep the Monday high and then moving lower. So we got that consolidation Thursday reversal weekly profile. If we go to my intraday analysis, we're going to see kind of a better view of this. This is the 1 hour chart here. We can see Monday reaching higher back into this 1 hour CIVI. We expect price to break above this high. That's negated here as we contract to break lower. So then price moves lower to sweep these lows here, contraction back into that old daily high, moving higher to sweep that high. If we wanted to expand towards like this level here, long negation occurs as we contract inside of this range. We displace aggressively back into that new day opening gap. We return right back into the high, converging with this 4 hour inversion CIVI here. Actually, it would be inversion, but this CIVI. And then continuing that displacement lower, sweeping this low, sweeping these relative lows here. And then this is the previous week low that we just barely swept here on Friday during the PM session. My focus for this week coming up is going to be more of the daily range type. So setting my alerts, this is how I usually trade. I've been doing a lot of like 15-second chart work because I have a friend who's trying to learn this stuff and he's interested in doing that scalping stuff. So I've kind of been coming back into that, but I do want to start focusing more on my model that I like, which is more long-term stuff. It helps because I work on 9 to 5. I can't be in front of the charts during prime time. So just setting my PD arrays for what my expectations are for the week and utilizing everything from like 7 a.m., everything pre 7 a.m., utilizing that information to anticipate the high or low of the day, trying to catch that and then catch that daily range. So that's going to be my main focus for the trades for next week. I have Tuesday, Wednesday off, so I may do a little bit of intraday work still. It kind of depends if I wake up on time, if I get enough sleep, a lot of different factors. So again, if I pull up this chart for my expectations for the week ahead, I have price sweeping this low, and I'm expecting continues draws lower. I don't know if this is going to be the top. I'm not going to pick that. Seasonally, we do see a bearish decline in the second week of August. So I'm just going to continue low-hanging fruit objectives, aiming for that draw lower. So we have multiple converging PD arrays. This is a monthly BISI here. If we pull up a fib from the high, from the low to the high, that upper quartile constant quotient lines up fairly well with that constant quotient of that weekly BISI. Multiple converging PD arrays. We even have that daily BISI here, which is in line with that expectation as well, around that 6,172.5 level. I'll have to continue to develop my weekly analysis as the week trades. If we form some sort of crazy expansion through this BISI, we might try to attack that high. Things like that, adapting to what price is telling me rather than forcing my will on price, and we'll go from there. So I hope you enjoyed episode 3 of Positions and Perspective. Very insightful one. I honestly, before I did this review, thought I did much worse in my trading. So doing my review kind of showed me a lot of confidence in my setups and my ability to handle contractionary environments. I am very happy with my performance. Even though I ended up breaking even, I called a win. So I hope you enjoyed. See you next week.